Welcome to this video. In this video, I'm going to be making an analysis of the Vanguard S&P 500 ETF. So if you like this video, please don't forget to leave a like and subscribe. And of course, remember this isn't financial advice. This is purely for entertainment and educational purposes. Now, as you can see, this graph goes all the way back to 2014 and it's just increasing nicely, which we of course love to see. And why does it increase so nicely? Of course, we have seen these drops, but that is because it is an index, so it is one of the safest products you can purchase. Now, look at these drops. That is, of course, as you can see, this right here is the COVID pandemic. And then up here, as you can see, we did see a bit of the 2022. If you don't know, this was one of the worst years in history for stocks. That is why we have this huge, not crash, but this downturn right here. And ever since then, it has been up quite a lot. And then, of course, as you see up here as well, a huge crash. Well, that was from Liberation Date, but we have almost regained that, which, of course, very nice to see. Now, the performance of this is quite amazing. Let's just go back to 2010. As you can see, right, perfect. Most of the years this performs amazingly. Of course, we do see some years with negative returns, but overall this has been absolutely amazing. That is of course because it just follows the S&P 500, so the risk in this is quite low compared to normal stocks. Now the type of exposure it has is 99.85% in stocks, which is nice to see. And now as you can see right here, they have $679 billion under management, which is of course amazing. And as you can see, they pay out a dividend of 1.26% a year with an expense ratio of 0.03%. This is what it costs you to have the ETF, which is very, very little. And I believe it is one of the cheapest ETFs on the market. Now, as you can see down here, you can see the sectors they're in. They're in basically everything. And that is, of course, because they have a lot of companies. They have a total of 507 holdings, as you can see right here. Now you're going to notice that the top holdings is many of them are the Magnificent Seven, and then we have companies as well as Broadcom and Berkshire Hathaway's right here. Of course, this is amazing, and you might think, isn't that a risk? Well, it's actually not really that big of a risk because we have so many different holdings, as you can see right here. So even though they are, let's say, almost 20% is in, actually more than 20% is in these four stocks alone. Of course, you might think, well, that is a problem, but it isn't because they could fall a lot, and then we still have 80% of the market to carry them. So of course, it is a bit of a risk when an ETF has huge holdings in a single company, but the max one is 6.82%, which really isn't that bad at all. It just goes with the market, so you really shouldn't be worried about that. It is by far one of the safest ETFs you can be in. And as you can see here, sometimes they pay more and less dividends. As you can see, it bounces up and down a little bit. And as you can also see down here, the assets under management they have has just been increasing ever since, forever and forever. What's that? A year ago, $200 billion less under management. Now it has just increased insanely much, which is of course nice to see. As you can see, sometimes we see huge inflows and of course also outflows of cash in this ETF, which is quite normal, but that's of course very great to see that so much flow is in and out of the ETF, which means it is quite healthy. Now let me just go back into the stocks that were in it. Now as you can see down here, of course, many of these companies also have had great years. As you can see, Microsoft, for example. Let's just look at that. Let's look at that. Year to date, up 12%, amazing. The last 5 years, up 144%, amazing. Then, of course, everybody's stalling. Nvidia, as you can see right here. Last year hasn't been that great, but the past 5 years, up by 1,400%, which is, of course, absolutely amazing. So, of course, this has risen quite nicely, which means that sometimes an ETF like this they're gonna have to sell some of their Nvidia corporation, because if they had a lot of stocks before this in a huge rise, well then the chances are this assets under management in Nvidia would be a lot bigger, and then they can never have anything more than 10% in one stock. But that doesn't really matter here because, of course, it is just following the S&P 500. So if the S&P 500 is weighted 10% in Microsoft, well, fun fact, so where's the Vanguard ETF going to be? So you can always be certain that there isn't going to be one company that they think is going to do amazing, which is going to take up a huge spot up here on the top asset list because they simply follow the S&P 500. So that means you always have the best security you can have. Of course, if the market falls and there's a huge market fall, well, you're going to be out of luck, but so is everybody else. But this is by far one of the safest products you can be in. And overall, 99.9% of investors never beat the S&P 500 year over year. And as you can see, let me just go back to this right here, the seasonals. Where the frick did I go? There it is. How many people do you know that for 15 years could make these returns? I doubt you know anyone. So of course, as you can see, just absolutely amazing returns most of the time. So if you want to make the most of your money, the smartest thing to do is invest in a lot of ETFs and then have some small stocks on the side. But of course, that is only my opinion. And this isn't financial advice at all, but at least that is how I do it myself personally. So of course, if you want to do that. But as you can see here, just amazing returns year over year. Of course, that could stop happening because what do I know? Maybe people don't want American stocks in the future. But if we look at the track record, it's going to keep doing that forever. Now that was my video on the S&P 500 ETF from Vanguard. Now, if you want to make any other videos on ETFs or stocks, please leave those stocks or ETFs in the comment section below, and I will check them out. Thanks for watching.